Welcome traders, hi there, this is Steve Miley once more for FX Explained, Steve Miley the market chartist, and we're going to be taking a look at the Forex markets, focusing on the risk currencies. Now the risk currencies are those currencies that you would enter into and buy if you were in a risk on scenario, i.e. Traders, investors willing to take more risk. And you can see in our article about risk currencies and different types of trading different currencies in the link below in here. So go take a look at that article on different types of currencies. But we're looking at the risk currencies in here, and they would include amongst what we call the majors, the Australian dollar, the New Zealand dollar and the Canadian dollar, also called commodity currencies because their economies export a lot of commodities. So Aussie, Kiwi and CAD are what we're going to be looking at in here today. AUD, USD, NZDUSD and USDCAD. So they're going to kick off in here with the Australian dollar versus the US dollar, AUD, USD. And you can see the market's been in this erratic kind of downtrend in here from September, from the actually late part of August, early September. But more recently in this sideways trend in here, between 70 and 72.5, caught between there really from the middle of, from late to the middle of September. And the market in here though breaking down, we do see that we're in lower highs in here. A succession of lower highs, and the breakdown we're seeing in here over the past 24 to 48 hours as the global equity markets have more aggressively switched to risk off. Let's just have a quick look at those. We've been featuring these recently. We had an article yesterday. Look at the DAX in here, plunging lower. Look at the S&P 500 in here, plunging lower in here over the last week, sending some real negative signals in here. And that's now impacted back into the risk currency. So you can see an Aussie dollar in here, the last 48 hours selling off. Low-level consolidation in here over the past 12, 24 hours. And the market really at risk of a more bearish shift. Well, we've already kind of signaled that bearish shift with the break below that 70.02 level, not just 70.02 but also below the psychological option strike level at 70.00, just down to 69.99. That from my technical perspective is enough to shift the intermediate term outlook, the medium term outlook, the outlook for the next 1, 2, 3 weeks in here to more bearish, with the prod below 70.02 and 70.00 down to 69.99. Short term threat with this low level consolidation in here over the past few hours, overnight in here, leaves the bearish pressures intact, and then intermediate term also going into next week, we're also looking for a more negative theme. So certainly very much seeing a risk off scenario in here for these risk currencies, and they're looking more vulnerable. So Aussie aiming lower in here, and it's a very similar story in here for the other risk currencies, New Zealand dollar and the Canadian dollar. In here, we've been talking about the head and shoulders pattern yesterday in our report. We looked at the head and shoulders pattern on the DAX. Well, look, we've got a head and shoulders pattern in here. Let me just go and go in here, and we'll take the ellipse in here. So we've got kind of this shoulder over here, this shoulder over here, kind of this bigger shoulder, and then we've got kind of a head, okay, up here. You could argue the head's like through here. We've got this bigger head, and then we've got another kind of shoulder potentially building over here. Okay, you can see potential shoulder over here. So you've got this kind of potential head and shoulders pattern. It's got a double head up here, a double top within the head, double top pattern within the head, and that all looks very, very negative in here, again in here. Real risk for the market to push lower. We've already broken down through this little counter uptrend line, and real threats lower. The market's selling off from 67.24. All started to look a lot more bullish. When we broke above 66.82, 88 last week, my intermediate term outlook shifted more bullish, but now this setback is threatening a more bearish shift. Now we've got all of these supports here, 65.94, 65.49, 43 and 65.08. Critical for me though is going to be to break through 64.86. If we take out that low, then Kiwi dollar then really does fully confirm this kind of topping pattern, this double-headed head and shoulders top, and it would look a lot more negative. I'm not expecting that anytime today soon. These supports in here are at risk going into today. Okay, these ones here, 65.94 and 65.49, 43. However, the downside threat going into next week, and remember we do have a massive event, the US presidential election, the real downside threat is we break this neckline and we break this 64.86 level. Let's round off in here with the US dollar versus the Canadian dollar in here. dollar CAD surging higher. One of the big drivers in here is, yes, we're getting US dollar strength because we're in the risk off scenario. The US dollar is taking its position again as one of the safe haven currencies alongside the Japanese yen. Also, Canadian dollar selling off because it's a risk currency, a commodity currency. It's an exporter of oil, and the oil price has been significantly damaged in here over the past week. Oil selling off. Actually, we can have a quick look at oil. Here's the oil chart in here. Look, oil getting plunged, oil plunging lower in here. Oil's plunging lower in here over the past week or so, and that lower oil price in here impacting into the Canadian dollar. Okay, lower oil prices not good for the Canadian dollar as an exporter of oil. So that's seen dollar CAD, USD Canadian dollar push higher. That's US dollar higher, Canadian dollar going lower. And we're coming up to a critical resistance up here at 134.18.19. Dollar CAD has been bearish all the way through here, right the way really. I mean, I think we shifted in our view for my clients, we shifted negative back here, up here in April. We saw a bearish shift in here. We're now seeing dollar CAD potentially shifting back to bullish. If we get above these 134.18.19 highs in here, it's a kind of like a double bottom pattern. It's certainly a basing pattern of sorts. And if we get above 134.18.19, we got up to 133.90, very close yesterday, and pointing higher again this morning. If we get through here, then we get a more bullish shift in here for dollar CAD. So guys, in here, thank you so much for watching the video in here today. I'm going to say, please do like the videos if you're enjoying what you're seeing. Also subscribe to our YouTube channel, and I'll be back with you very soon with another markets report.